Hey guys, what's up? Welcome to another episode with me, Shashank Udupa. And in today's video, we are going to talk about the Motilal Oswal Mid Cap Fund and what have they bought, because they are very controversial and we want to know what they've been buying for the last 1 to 3 months. And they're also buying very risky picks. So let's see what has happened to them. And also, I want to look at Nifty very quickly because finally we've got some good news. After so many days of bad news and non-performance, finally we saw some nice green Haryali in the market. So let's quickly get in. Now, before we get into the video, I want to thank our sponsor for today's video, which is Grow, because they have made us a part of Grow Network, with which we have able to set up the studio, set up an office, set up a lot of people that have come and have started working with us. So again, thank you, Grow, for helping us with all of this. Now let's get into the Excel sheet and understand what is happening with our tracker. Now, as you can see, some of the increases they have done, they have increased Paytm by almost 30-37%. Now, if you look at Paytm, right, they have been doing very well because the result also came out good. And if you see their stock price right now, they have already broken their previous high, not all-time high, because after their IPO, they've actually fallen down quite a bit. But now they are making a good move. Yes, it did break out, it did retest, and now it has started going back up in a normal fashion, right? So only problem is it has deviated a bit too far away from its 20-day moving average. But again, that's not a very, very big problem because fundamentally it is fine, not a problem at all. The second company that they have increased their stake in is Keynes Tech. Now, Keynes Tech, again, one company that is very supremely overvalued. If you actually see Keynes Tech and if you see the fundamentals of it, it is not very great from a valuation perspective. Yes, talking about the stock, it is debatable because see right now the valuation of this company is sitting at approximately 128 PE, right? Now, again, as I said, it is slightly debatable mainly because it is sitting at 40,000 crore market cap, and we saw what happened with the entire space. Recently, PGL came out with very bad results, very bad guidance, and it crashed. And that was sitting at 90p. Whereas Keynes is slightly different from it. It is in the similar space, but slightly different. Whereas if you see Dixon, again, heavy into mobile manufacturing, laptop manufacturing, and they're also quite diversified. So that is why Dixon commands that extra premium versus companies like this, right? Now, looking at the third company that they have taken up, they have increased their stake by 13% into Aditya Birla Capital. Now, Aditya Birla Capital, again, very interesting. And if you see now, most of this will be in momentum. Again, see, Aditya Birla Capital is very close to a breakout, very good in the momentum zone, and constant buying is happening from Motilal to like increase the stake in this company. And this is the third company that they have increased in. They have also increased their stake in Kalyan Jewelers. Again, it had gone up, fallen down. They got a lot of backlash for this, and then it started going up again overvalued. If you see, this is also at approximately 80p with 37% revenue growth. So if you see this, just the top 4 picks or just the 4 picks that they've increased this quarter or this month is 197 is a momentum company, Keynes is overvalued. Then you come back to Aditya Birla, which is again good momentum, growing well. AMC businesses are doing well. And then we have Kalyan Jewelers, again overvalued. So these are some things that we need to keep about. Then we have Polycab, again good company. Domestic demand is strong. Capex revival is happening. Infrastructure boom is happening. Then we have Trent. Again, they have slowdown coming in slowly. Their PE ratios are again very high. And Dixon, again, same thing, high PE ratio. Not slowdown indication has not come in Dixon, but again, if you see that the PE ratios are very high, because the problem here is my risk goes up quite drastically. One small mistake or one small change in the macroeconomic situation of our country, boom, these companies will start taking a massive hit. So that is basically what it is. Bharti Hexacom almost reaching saturation. It is a subsidiary of Airtel. Their broadband growth is slightly saturating in those 2 states. Prestige, I think builders are doing well, but there is one concerning problem that is coming up in the building space, which I don't know if you're watching, but for a lot of people who are tracking the real estate market, we have seen slowdown happening in Bangalore. A lot of unsold inventory is sitting right now. Even in Delhi, Gurgaon, I heard people are giving discounts on real estate projects as well. So this is something let's be a little careful of, because I know we have the capex play, revival, tax benefits, GST going down, everything has come into the system, right? Everything looks good. Interest rates are low and all of that. But I think these guys also did too much inventory right now. So oversupply is also getting created. And this is usually a cycle. there is demand, oversupply, and then it falls. That is what is happening right now. Persistent, flat QOQ. I think this is because the whole IT sector is taking a nice beating from all sides. So Coforge, Persistent, even though they're the only two IT companies that are doing phenomenally well in the entire IT value chain, they are not doing really well on a QOQ basis, right? And even Coforge did not win a lot of orders. Persistent also seeing some flatness happening. But again, long term, great. But I think they have increased a very small amount here of 2.86, right? Now let us look at what they have decreased. They have decreased Mankind Pharma, they have decreased Phoenix Mills, and they have completely got out of Geo Financial Services. Now, Geo Financial Services also is overvalued, also has a lot of high P margin into it, and their favorite company also, I think last quarter they sold, which was your what is that, Zomato, right? They loved Zomato, they kept investing in Zomato, but very weirdly, in one month they had Zomato, next month they sold Zomato, then they had Zomato, then they sold Zomato. So basically I think with Zomato the mutual fund is doing a little bit of swing trading, but with other companies I think they're pretty much decent over here, right? Now this is basically what Motilal is doing, and if you see most of their top 10 okay over here is predominantly playing in momentum zones, right? Now let's look at the risk valuation of this entire portfolio. If I had to go and check the risk valuation, this is exactly what I thought. Now, obviously, they have a 77,000 crore market cap. Their cash holdings are sitting at 17.96. So they are pretty much a good amount in cash. But the portfolio PE ratio is sitting at 68, mainly because they're playing such high momentum stocks and high momentum picks that their PE ratio of the entire portfolio has gone up quite drastically, which is, I would say, very aggressive even for a mid-cap fund, because I know so many small cap funds are not sitting at 68, whereas a mid-cap fund is sitting at 68 PE. What is the problem with having a high PE? The companies have to deliver that kind of results, and even if they deliver such good results, your PE gets normalized, right? So that is basically what it is. So this is what they have. They are currently heavyweight on consumer discretionary, which is a good thing, which is now with GST it will go up, and technology, which is 26, which is not a great thing, because right now technology is not doing well. Industrials is 16%, so again a good thing over here. And healthcare, they barely have any allocation into healthcare, right? The top holdings, as you can see here, which is where my fear shoots up 5x. Dixon Technology, 10% of the entire portfolio. 9.36 is Coforge, Kalyan 8.86, Persistent 8.29, Trend, Polycab, and you can see they're constantly increasing stake in all of this, right? Again, I don't know what will happen with this portfolio. I am not bullish or bearish on any of this. My job is to just come and check this and do an unbiased review. And if you ask me to do an unbiased review, I would say, yes, sir, it is slightly overvalued. It is not undervalued from any angle. So that is basically what I will say. Now, finally, coming to Nifty 50 analysis, as we saw, finally, the market or the government has realized that itna tax dal ke kya hi karoge. So I think they're now reducing the tax to boost consumption, mainly in rural and urban India. And right now we saw that the market rebounded in the first half and then slightly came down in the later half of it. But no problem. We went up 1% on the index level, and I'm very happy because now most of the short people who were sitting on short, right? A lot of these guys had shorted the Indian market, and mainly FIIs were sitting on net short. Like almost 80-85% was short. But again, let's not get into those data. Most of the times what happens whenever like a gap up like this happens, which is great, most of the sellers get absorbed and the new buyers kick in. So right now, I wouldn't be surprised tomorrow if it's either flat or maybe a small profit booking. But if the GST comes out the way we are thinking, then the future will be very bright. Again, that comes in Diwali. So let's see how Diwali comes out and how it goes up at that point. But right now, Nifty 50 from being absolutely useless in this entire year has finally started to show some legs, right? And as I said, usually whenever there is a bad year in Nifty, it is usually followed by some good years as well. So let's see, let's hope. All we can do is hope. So we'll see and hope if this does well. And if it does well, then all of us will be very, very, very happy, right? Also guys, before we shut the video, I want to give a final shout out to Grow, who has sponsored this video and sponsored the channel. So I'm again very happy about this. And if you want to know more about stock investing, you can definitely check out the Grow app. And again, thanks for watching this video. This is me, Shashank Udupa, signing off. Take care. See you guys. Bye-bye.